Alright, welcome everyone. Welcome to Thursday's live stream. So, as you guys can clearly see by the title, I'm going to explain to you guys why I believe SPY can see a move to 460 and maybe, just maybe, even more than that. Alright, so I'm not trying to sound, very bearish, but again, there are reasons to believe that the market is going to continue to pull back. All right, I have at least 3 major reasons why, so bear with me. Don't try to take it too seriously. I'm looking at this from a very objective perspective using technical analysis and other indicators. So make sure you guys, just listen in and take note of it. All right. So, long term, let me make this straight first. Let me make this clear. Long term, I am bullish. Short term, we are indeed in a textbook pullback. All right, so far, from the current highs that we have on the S&P 500, as seen in a daily time frame here, okay, is sitting at 477.55. So with this type of a high here, and if we decide to, just see how much we've fallen the past couple of days. Okay, we've fallen around, over 2%. That is again a pretty textbook pullback, right? And usually textbook pullbacks are characterized by at least a 5% move. So, what does a 5% move indicate from highs? Well, it says that we can at least get down to around this 451.50 or 452 level, whole number level, right? So at least a 5% move or pullback from highs would say that the price should be around 452 or 451.50. It's a very small, minimal difference, only 50 cents apart. But if we do see a textbook 5% pullback, that's what we should be seeing from the highs that we have now, which is again at 477.55. Now, that isn't the only reason why I think we can be seeing 460. Okay. Now, first of all, on the daily time frame, okay, I have drawn for you guys here or outlined here this little area between 451.50. Again, you guys can round it up to 452 if you guys want to use whole numbers. All the up into 459 or 460. Okay, so if you guys just want to use very simple numbers, okay, and if you guys want to use, clear numbers, and if you guys want to go by tens, 460 is your number, right? Whole number level. So I'll just make that apparent for you guys and very easy to see. Okay, so this shaded area that's in green here signifies that there is a demand area. Now, why is this a demand area between 452 to 460? Well, first of all, this was a heavy area of resistance. Right, we saw that resistance coming in multiple times right around here. Okay, so we first rejected around 460, marking it as a level here, and then we hit 452 or 451.50 to be exact, multiple times, rejecting it, unable to try to get back over that 452 or 451.50 level and consolidate. And instead, we continue to reject and continue to move down, ultimately marking that October 27th low. Now, as we moved back up, we were able to overtake 451.50 or 452 again. Now, I'm going to say 451.50 because that's subjective for me. I like to be a bit more precise on my levels. So 451.50 was used as a level of resistance right over here when we made this very, very small micro bull flag. And then we broke over it and we continued to consolidate in between this 460 to 451.50 supply area. And once we're able to break over 460, which occurred on December 11th, decisively, that's when we turn this supply area into a new demand area. And as long as the price continues to stay around this specific new demand area, it will stay as a demand area. Now, The other thing that I want to talk about, okay, is that right now, today, right, we saw a close below the daily 21 SMA. That's never good, right? That's never good. However, there's still a chance that the markets can pivot higher. Now, that's all based on speculation, but based on the volume participation, there's something going on here. Yes, the average volume has been increasing as we're seeing this pullback occurring, right? It started right back in the last few days of December, right? Last half of December is what I'll say here, right? Right around here, okay, this specific area. And you see this volume increasing, which means that money, right? Money was already starting to go out of the S&P 500, and also we're starting to see some profit taking early into the new year. Plus, we're starting to see some short positioning occurring before the new year started, right? And so with this average volume going up, and the fact that the price is now participating with this increase in volume, okay, it's a pretty good idea to say that the price should continue to pull back. Now, here's where it gets a little bit. It could be getting a little bit confusing here, but whenever we do see a break below the daily 21 SMA, we tend to get another snap back up to the upside. And once we do that, we're going to see a retest, or we tend to see a retest at the daily 10 SMA. And then we get that final rejection where we see that large pivot lower until we break below the daily 21 SMA again, thus creating a new reversal, a new downtrend. So again, there is a slight possibility that there can be a very big snapback move up over the daily 21 SMA tomorrow. Okay, now that all depends on all that economic data that we're having tomorrow, especially the non-farm payrolls. Okay, everyone's going to be looking at the NFP data early in the morning, but based on how the market reacts to that data and the multitude of data that we have that's coming in tomorrow early morning, pre-market, and during early market open hours, that's going to really decide the fate where we should be going tomorrow. So again, ideally and in a very speculative way, I will want the market to snap back up over the daily 21 SMA like it did today, come up and retest the daily 10 SMA, this red line here, which could be around 472, and then we get the official confirmation that yes, the market is wanting to go down. Okay, that'll be the final confirmation when we retest the daily 10 SMA and we push lower and break below the daily 21 SMA. Now, obviously, today's candlestick is not looking good at all. This is a inverse hammer candlestick. Okay, that's never good. And so, obviously tomorrow we'll see whether or not we get that confirmation if we do break below today's low today, sitting at 467.05. And so if we do see all that happening, where we retest the daily 10 SMA at 472 and move lower, then we can continuously make lower lows and lower highs, creating that textbook downtrend until we hit 460. Okay, now I want you guys to look at this specific area in the past. So if you guys remember, when I called out that exact pivot, okay, between October to November, right? So obviously October 27th, this is the infamous day when we saw that official pivot, okay? And I told you guys back in late July and early August that I believe that somewhere between late October to November, we'll see that official market pivot, and that's exactly what we got. All right, and we were able to capitalize on this. So it's a very, very good large move up. But anyways, so what I'm trying to show you guys here is that just like what I just explained to you between 451.50 to 460, we had a similar occurrence here where we had a major area of resistance in between 409 to around 415. And in this specific area, right, we saw a nice rejection down. We saw a nice pivot at 381, and then we came right in between this 409 to 415 supply area where we started to consolidate for weeks until we're able to finally decisively break over this 415 level and move away from the supply area between 409 to 415 on May 26th, and we saw the nice breakout. And so after we saw this happening, we saw that quarter 3 pullback coming in, where we had that negative 10% plus pullback, a very textbook pullback, right back into this previous supply area. Okay, and what we did was that the price broke below this top range of this previous supply area. Now obviously it was a demand area, and we came all the way back down to retest the lower range of this specific area at 409, and then we immediately pivoted and we saw that nice V-shaped recovery with a bullish momentum switch, and we're able to see that amazing run up into quarter 4. Okay, so why am I giving you guys this example? Well, because it's very similar to what could be occurring right now. All right, so this is what I expect to happen for the rest of this month and into February, where we see usually one of the worst performing months in quarter 1 of any trading year, plus March tends to be a weak month, as well as that bearishness or that weakness spills over from February to March. And March usually creates that official pivot into a more bullish April, right? A more bullish start to the second quarter of a new trading year. So there is a chance that yes, we can break below 460 and even head into that lower range of this new demand area. Again, this is still demand area because we haven't even gotten close to it yet, and we're still staying over it. And we can come back down to hit 451.50. Now, there's one specific problem though. Okay, and what is that problem? Well, this daily 50 SMA is catching up rather quickly. And today it closed at 452.13, and I am going to expect to see this daily 50 SMA continuously rising up higher until the price retests this daily 50 SMA. So, assuming that the price continues to go down and we see a retest at 460, I would assume that somewhere around, let's say around 456, okay, kind of the midpoint area or level between 451.50 to 460, that is where I would expect or assume the daily 50 SMA to be at when the price is hitting 456 as well. So I want to see a coinciding move of the price down to 456, and also the daily 50 SMA sitting at 456, so that we can see a nice retest at that level, and then we pivot. Okay, so there is a slight chance that we won't be seeing a complete move down to 451.50 or 452. All right, but again, we are heading into one of the worst performing months of quarter 1, which is February. So there is still a very high probable chance that we can break below 456, including the daily 50 SMA have a rapid move down, as we saw over here when we broke below the daily 200 SMA, where it seemed like we were about to see some unrelenting selling, which we kind of did with increased daily volume here with the daily volume bars. Okay, that's associated with these specific candlesticks. Once we broke below the daily 200 SMA, we can see an overreaction like that as well, somewhere in between this 451.50 to 460 area. Is everyone with me so far? All right, I'm giving you guys a lot here, so make sure you guys let me know. Okay, so that is what I could possibly see by the end of February, or maybe even into the end of March. Now, obviously, January still tends to be quite a strong month. So that's the reason why, again, initially I told you guys that there is a slight chance that we can see a nice abrupt, move to the upside over the daily 21 SMA again and retest that daily 10 SMA before we see a confirmation to the downside and another large move lower. Okay, so now there is another thing that I want to talk to you guys about. Okay, and it's the AAII sentiment survey. So it just came out. Now, if you guys don't know what that is, Okay, it's where it's basically a broad survey that is taken every single week, where individual investors and traders alike, partake in a public survey, right? And it kind of shows the percentage of investors and traders who are bullish, bearish, or just neutral on stocks now, or the overall equity market. Here is what is very, very interesting here. All right, so what I'm showing you guys right here is pretty interesting. So, I mean, I don't really need to explain it that much, but so here we see the AAII bears, AAII bulls, and so far we have seen a decrease in bulls. All right, and yes, okay, for the past week, we've seen this decrease in AAII bulls. I even mentioned this to my members last week, and including last week, that we're probably going to be seeing a very, very, I guess, obvious data coming out from this survey that bears will probably see a slight jump as we're kind of topping out into this first week of this new year. But if you kind of correlate the S&P 500 chart to the AAII bulls, you see something happening here. So back in the first few months, or first few weeks, I guess I would say, of quarter 3 of 2023, we saw this bull spike. And that could just be a simple explanation as to the fact that the market has sucked in more bulls as the market continued to make higher highs and higher lows and trudged on higher. And that's exactly what we saw here in late, I guess mid to late July, all the way up into early August. And that's where we saw that the bulls just being sucked in and ultimately getting kicked out as the quarter 3 seasonality kicked in. So could we be seeing the same thing happening and occurring right now, right? Where we're seeing this sudden, I guess, quote unquote volatility in the bull spike. I don't think that's kind of the right word here, but based on the line chart here that we're seeing now with the AAII bulls, and the weekly data constantly coming in, there is a chance that we can be seeing a very small area of volatility in the S&P 500 to suck in more bulls, so that we can see eventually a breakdown of the bulls as they get kicked out and as the price continues to move down. And that's again kind of confirming what I said earlier, right, about my little speculation that yes, we can possibly see a snapback over the daily 21 SMA until we retest the daily 10 SMA and then we reject it, or we retest it and we continue to move tightly in between the daily 10 and the 21 SMAs until we get the official break to the downside below the daily 21 SMA, officially starting the reversal to the downside until we hit 460. All right. So again, that is a lot of information. So make sure you guys let me know if you guys have any questions thus far. Does anyone have any questions? Hey, I see you guys' emojis there. All right. So now, again, we have sentiment kind of backing up. There is that slight, again, this slight divergence that's going on here. Right, that's the correct word there. With the bull spike and the underlying share price of the S&P 500. So this is a pretty interesting chart. And so, as long as we're able to see this play out, including everything that I just told you guys about quarter 1 seasonality, January to February seasonality, even all the way up into March, there's a chance that we can see that bear spike happening at the official market pivot low in March that will set up for a much more bullish start to the month of April and into the second quarter of this year. So again, this is just following one specific sentiment, quote unquote, indicator. Right, this is the AAII sentiment survey, obviously. So we don't want to be following just this. Right, obviously we want to be looking actually at the in real-time data, which is the share price of the S&P 500 and the price trends, and the overall, market outlook and sentiment. So again, this complete analysis that I've just done for you guys for SPY is basically all my reasons and all three factors as to the reason why I think the market can move lower in the next few coming weeks into the overall weak month of February. Because again, February seasonality tends to be known as one of the weakest and worst performing months out of quarter one of any new trading year. Okay, and I also want to talk about, with that, okay, so I want to talk about the fact that commodities, especially gold and silver, but especially gold, tends to do well into late January into the rest of February. And that kind of makes sense as people kind of want to move away from equities and start moving into commodities when the market is weak, right? That's not really a seasonality trend where people want to move into a quote-unquote safe haven like gold because equity markets are going down, but that is a tiny specific trend that we tend to see here and there when we do see that type of market seasonality hitting, especially for a month like February, which is the reason why we can kind of relate that to the fact that gold seasonality, when gold is strong, happens to fall right in between late January into early and most likely the rest of February, right? So that is something that you guys should be watching out for. Gold is currently consolidating. Obviously, gold has been seeing a little bit of a trouble here as the dollar has been making a slight comeback here during its downtrend. But I'm going to be following this pretty closely here with gold and the dollar here, and obviously bonds, which has also been pulling back along with the equity markets, which have been very, very closely tied to each other for the past couple of months, and for, for most of the months here, right? That I'm showing you guys here with my mouse cursor. So, for gold specifically, I'll be looking at the ticker GLD and GDX, gold miner. So make sure you guys take a look at that. Obviously, my most recent GDX trade did not go out. I was stopped out, but eventually I will want to see that seasonality coming in and kicking in for gold as the overall equity markets start to pull back. Okay, now there's one last reason to be slightly bearish to the downside in the next few coming weeks. Okay, the leveraged Ultra Pro short SQQQ. All right, I'd love to look at this one. So this one has been gaining a lot of bullish momentum for the last couple of trading days, which makes sense. So the market has been pushing lower, which means this one as an inverse leverage ETF is starting to go up, right? But what's more interesting is that this increase in momentum and increase in price here is associated with an increase in volume. So there is a consistency here with the volume going up, with the price going up as well. So it's a pretty good idea to at least keep your eyes on a few of these inverse leveraged ETFs like SQQQ. Okay, and if you guys want to take a look at another one, okay, SPXS is the leverage, 3 times leveraged S&P 500 bear ETF. This one has also been getting a nice ramp up higher, plus backed up and associated with an increase in volume every single trading day, including an increase in the average volume as well, with this slight move up higher on this orange line that you guys see here. Okay, so again, this is not a long-term bearish case. I'm not looking for a large, market crash to start this year. Okay, again, SPY, I showed you guys earlier, from highs here at 477.55. If I'm correct, and we see a textbook 5% decrease from the highs that we have now, right, we could be seeing at least 456 or near 452, right? 452 is literally perfect, right? Negative 5.24%. All right, I showed you guys this earlier, but I'm just gonna give it to you guys again. So Now, could there be a 10% pullback? Sure. Yeah, why not? We could see a textbook 10% pullback again, where we bounce around 452 or 451.50, or maybe at 456, where we bounce at the daily 50 SMA, kind of consolidate here and there before we head down lower until we hit that 10%. And that will also be filling in a lot of the gap ups that we completely forgot about during the run up in most of November of last year and into December. So, again, the S&P 500 never ever forgets about gaps. It will always 100% of the time fill them. So maybe this is the time for most of quarter one for the market to start filling in these gaps before we start heading up higher for the longer term. Who knows? But we'll take this thing week by week, because again, this is kind of a longer term, still short term, but kind of a longer term week by week basis analysis on what the market can do. And based on all the different factors and indicators and the analysis that I've done for you guys on where the market could potentially be heading towards in the next couple of weeks. So again, in the next couple of weeks, I am most likely going to think that the market is gunning for 460, and depending on how we react, is going to determine whether or not we break below and start consolidating in between this large new demand area. Well, I guess old demand area, since we are staying above it now, but it'll be again a new demand area for us to consolidate in between 452 to 460. But if we do break below 452 or break below the daily 50 SMA, or just overall break below this specific demand area, it will return right back into a new supply area. Okay, because again, demand and supply areas are always constantly changing and fluctuating based on where the price is at and based on what the price trend is doing. All right. Okay, so that's kind of it. I mean, I have nothing else more to say other than good luck. Make sure you guys use this analysis as well as possible. All right, again, don't be offended if you're bullish or if you're bearish, whatever you guys might be. Right? If you guys are bearish, you might have a longer target than me, than 10%. Maybe you guys want a complete pullback back down to that official pivot that we saw back in late October. I don't know what your guys' analysis is, but again, doesn't matter if you're bullish or bearish. Make sure you guys are looking at this from a very objective perspective. That is the most important part about trading. So right now, as long as you guys are understanding why I believe that we can be seeing 460 in the next couple of weeks, then you're good. All right, and make sure you guys are listening in to what I told you guys basically for the past 25 minutes. All right, and don't take one specific thing that I said or one specific factor as to the reason why we can be going down to 460 or even 452 too seriously. Right? Make sure you guys look at this from a cohesive perspective. All right, don't just cherry pick one thing that I said. All right, look at this from a cohesive perspective, because that's important to objectivity. All right. Okay, so that is it for this live stream for the rest of the week. I will be doing this live stream again on Tuesday as usual at 8 p.m. Pacific Standard Time or 11 p.m. Eastern Standard Time. Thank you guys so much for watching. If you guys enjoyed listening to me on the live, or if you guys are here listening to the recording, and if you guys learned something, or if you guys are willing to apply this analysis to your own trades, make sure you guys hit that like button down below. All right. Now, if you guys aren't subscribed, I don't know why you guys aren't, but make sure you guys hit that subscribe button, and most importantly, hit that notification bell so you guys know that when I am live. And if you guys aren't notified, well, make sure you guys again check that you guys hit that notification bell if you guys are already a subscriber, so that you guys know when I am live or when I upload a new video. All right, have a great rest of your night, guys, and again, thank you guys so much for listening and watching.